Hi everyone, welcome back to Stacy State. If you've ever felt lost hearing the words like bull markets, bears, hawks, or doves, don't worry, you're not alone. On today's episode of Market Mindset Mondays, I'm going to break down this common market lingo in a way that's simple, relatable, and so easy to remember, so you can follow financial news and sound like a pro. Are you ready? Let's get into it and decode this jargon together. Let's start with bulls. When you hear bull market, think optimism and growth. A bull charges upwards, just like prices do in a bull market. An example would be if stock prices are generally rising over months or years, we say we're in a bull market. Most of the time, this is when investors feel confident, which means they will buy more. And this buying pushes the prices even higher. Next up, the bears. Bears swipe their paws down. So a bear market means that the prices are dropping. Investors feel cautious or pessimistic. Investors will either sell or hold in a bear market. An example would be if the stock market drops 20% or more from a recent high. That's officially a bear market. Investors may sell off assets, which can push the prices even lower. Think of the basic economics we all learned in grade 7 and grade 9. High demand equals price increase. That's a bull market. Low demand equals price decrease. That's a bear market. Correction is like when prices take a short break after going up too much. For instance, if a stock climbed from $100 to $120 quickly, then drops back to $108, that 10% drop is a correction. It helps the market cool off before deciding what's next. On the other hand, a rally is like a sudden burst of energy. An example would be if a stock has been falling, but suddenly it jumps up 5% in a day because of good news. That's a rally, a quick burst of optimism that lifts prices fast. Now I know you guys have heard sentences like, the markets are super volatile, or gotta take advantage of the volatility in the markets right now. But what the heck does that even mean? Simply put, volatility shows how wild and bumpy prices can be in a market. Think of it this way. If a stock moves from $50 to $60, then back to $52, then up to $65, all in a week, that's considered high volatility because there's lots of big movements up and down in a very short time frame. In CFD trading, this can happen in matters of seconds, minutes, or just a couple of hours. That's why in the last video where we discussed investing versus trading, I said the mentality for trading is get in quick and get out, because traders are trying to take advantage of the volatility as quickly as they can so that they can make profits. But volatile markets like Forex and crypto are very, very risky. Make sure to do the correct research before entering the market, or you'll find yourself losing your capital almost instantaneously. So when you hear high volatility, remember, people are talking about big price swings in the markets. Ever heard people say the central bank is hawkish or dovish? Hawks focus on fighting inflation. They prefer high interest rates to keep prices stable. Doves, on the other hand, They care more about boosting economy growth and jobs. They prefer low interest rate to encourage spending. An example would be if the Fed is hawkish, it may raise rates to cool off inflation. If it's dovish, it may cut rates to support the economy. So, hawks means cooling down high inflation, and doves is all about warming up the economy. If you're trading CFDs or stocks, these terms help you plan your strategy. Bullish traders equals thinking price will go up, so they will buy or they will go long. Bearish traders think prices will go down, so they will sell or go short. Bullish market, a lot of people are buying. Bearish market, a lot of people are selling. Bullish market is represented by the color green. Bearish market is represented by the color red. A simple tip for you, always check the broader trend. It will help align your trades with market sentiment. I feel like today's video was a bit easier to digest from last week's video. Just remember, bull, up, buy, going long, bear, down, sell, going short. Correction and rally are normal market moves. Correction is down, rally is a sharp upwards price move. Volatility, how wild the swing gets. Hawks, policymakers who want high rates to fight inflation. Doves, policymakers who want low rates to support growth. Now you know what bulls, bears, correction, rally, volatility, hawks, and doves mean. Next time you read a headline, you will get it instantly. If this helped clear up some market confusion, hit that like button, subscribe, and drop a comment. Are you feeling more bullish or bearish about the markets today? Let me know. Keep learning and keep growing your financial knowledge. And if you have any questions, drop a comment or DM me on Instagram or TikTok. I'm always happy to help you learn and have a better understanding about financial markets, because baby, that is where the money is. Bye everyone, catch you next time.